Hey, cannabis traders and investors, I'm Charting Man Dan with the Chart Guys. I've been trading the cannabis sector for the last 13 years. In this video, we're going to check in on the sector. We had another high volume week, some nice follow through for the bulls, but there was definitely a big sell off at the end of the day on the US side of things on Friday, reminding us the volatility in the sector that is ever present. We'll check in on where we stand bigger picture and some key short term levels to see if the bulls are able to maintain short term control, or is it time for weekly consolidation after that brief burst of euphoria.
All right, I just recorded a 20-minute video without hitting record, so good practice. Let's do it again. So before we get into the charts, we did a live Twitter Spaces call on Friday, and I'm going to put the link to that in the comments of this video. And I was joined by a couple of the people I follow on Twitter looking for, some fundamental information and different insights, and that is the Dales Report and Jesse Redmond. Good talk, balanced from fundamentals, timeline, technicals, game plans, things like that. So I would suggest checking it out if you can't get enough cannabis sector information. Now let's look at the charts. So overall, a good week, just in the sense that we saw high volume continue, we saw price levels continue to increase, and there was definitely a big sell-off at the end of Friday. We'll talk about that in just a moment. But again, before I get into it, just want to reiterate again that I am a short-term trader. I have made 95% plus of my gains in cannabis stocks, which have helped change my life financially and allow for me to be a full-time trader by giving me capital to work with. It's been long. So I do trade short, but I trade this sector long way more often than short. I have a long-term swing position that I'm trying to hold for a cycle bottom. And in the meantime, I will be trading short-term. A lot of people, it's tough as a full-time trader to then see a new influx of all these people with emotions running really high and not understanding the mindset of a trader. Why are you looking short? We've been bearish for 2 years. Well, MSOS just double topped. I didn't short this on Friday, but we double topped to the penny, and then we dropped 11% in an hour and a half. That is significant bearish opportunity. If I'm a short-term trader, I can be capitalizing on that, or at least protecting my longs. I'm not going to be a leaf in the wind where my account's going massive percentage swings. I'm going to be protective. So if I can see a double top and, maybe in one account, I'm not going to sell my MSOS long-term position, but I could grab a short of the same position size on a pullback like this, capture 5% of the 10% drop, and I just saved myself half of that drop. And so that's what I'm going to be doing as a professional trader. And so a lot of people don't like that, but it's just too bad. So just keep in mind perspective. I'm here to profit as a trader. I do more so long, but I am definitely open to the short side of things when the opportunity presents itself, because there is such a long timeline with this sector that we will see 30% moves up, 30% drops, and everything in between while we wait for these headlines to try and materialize, whether it's Schedule 3 or progress on safe banking. And if you want to root for me to stop out on my shorts, that's completely fine. It's part of the game. Again, selling all my longs pre-market on Wednesday, shorting on Wednesday, covering my short very quickly, realizing that we were getting zero bear follow through, re-entering my long-term swings, and now patiently observing whether or not the bears can follow through from the big sell-off at the end of Friday. And there's big volume behind this sell-off. That is a bit of a red flag. A lot of people look at it and say, oh, well, it's probably inflows. And in many instances, the drops are inflows. And again, inflows are when shares are created, the ETF gets cash for those shares, the ETF then has cash to buy individual names to increase the holdings of the ETF. But it's not always the case. And, Dana Hearns and MSOS are going to be blamed for this price action from here on out. And that's just the cross that they're going to have to bear, even though, oftentimes it is not the ETF that is leading to these price moves. And just as an example, the end of the day on Friday, in the last hour and a half, really the last hour, we're looking at volume of almost 7 million shares. And the inflows from Friday were 800,000 shares. So this is way more than just inflows. And we also had the highest 5-minute volume candle of the entire move, even more than when the headline hit. So the headline hits, and we had, the short squeeze and gap ups. The highest volume candle there was 1.8 million for that news. And here we are at the end of Friday on a big red candle dropping 2 million shares. That stands out. That is a lot of selling that is going on. And bulls locking in profit. So we have to make note of that. And just like Dana Hearns and MSOS are going to get blamed for price action here, watch. If we consolidate on the weekly time frame in these names and we pull back 30% from the high, you better believe that Dan and his group are shorting things and manipulating prices, and that's going to be a narrative that people talk about, when in reality, we are not moving this market. So MSOS is a different beast than a stock because it is an ETF, because of these swaps and these inflows and the buying of the underlying. It trades very differently. And nobody's complaining when we go up 14% in an hour and a half. And then at the end of the day, everybody's complaining about the volatility when we go down 11% in an hour and a half. You can't have one without the other. If you want to go up very volatilely to the upside, there's going to be drops of volatility to the downside as well. So what I'm watching into Monday of this coming week is key support for me is 778. Why that matters is just imagine a tug of war between bulls and bears pulling a rope, and the bulls are just, running with it for days, where they're just pulling the bears back from the middle line. And then we reach a point where the bulls got tired on the gap up open, and the bears started to pull the rope a bit in their direction. And they got it to 778, and then the bulls started pulling them again. It's a pivot. It's a price pivot. It's a point where bears had control to this point, and then bulls took back over. So that level matters to me because if 778 breaks, that's going to increase the probabilities that weekly consolidation is underway. And check out, I forget the things I said in the unrecorded video versus this redo, but on our YouTube channel, we've got tons of educational videos. And if you're, not heavy into technicals and trading, but you want to be aware of, both sides of the game, fundamental and technical, go to our YouTube channel and go to the playlist Lessons and More. And there are hours and hours of content of identifying trend changes. If anything, just be able to identify trends and price levels and pivot points, because that will significantly help you with longer term fundamental analysis. Well, not analysis, but fundamental investment as well. And I would suggest going through those YouTube. What does priced in mean? Correlations. We got videos on every topic. But one thing that is key to remember is if this is going to be a long-term cycle bottom, we've got to confirm a weekly uptrend. And to confirm a weekly uptrend, eventually that means we have to pull back for multiple weeks. And we have to set a higher low and then a higher high. And we have not confirmed a weekly uptrend in any meaningful way in the entire year of 2023. So again, the last thing that a bull wants to see is the top of this surge and then just slowly fade and give it back because, nothing changes and 1 week drags on to the next week. We've got to set the higher low and higher high. So it was a good sign that the bulls did that on the daily, but we have to remind ourselves that will have to happen on the weekly as well. And if you're going to change a long-term trend on the weekly time frame, that involves pulling back a bit. So 778 must hold level. On Monday, I'm watching the size of this hourly drop created space for a lower high. The size of the next bounce, retracement size, again, on our YouTube channel, Google TheChartGuys, retracements to learn about Fibonacci's. That helps us determine probabilities. And the bounce retracement size, let's say Monday opens and we bounce to 850 and then roll over back to testing key 807 support. That's going to be very different for me in determining probabilities to start the week versus if we get a bounce retracement up to 870 and then pull back. If we'd see that kind of bounce, I'm looking for a tightening hourly range. If we see the weak bounce, I'm looking at bears to try and confirm the hourly downtrend. And, this is a potential head and shoulders pattern. Head and shoulders just means going from an uptrend of higher low, higher high, higher low, lower high, lower low. It's just a trend change from an uptrend to a downtrend. And so that's a possibility. Can I say what's going to happen Monday? Not at all. But I will get information Monday morning on the size of the next bounce retracement that will significantly help me determine probabilities into Monday, Tuesday, Wednesday. And so the way that I traded on Friday is, during that before the spaces, I grabbed a long position saying, all right, we just double bottomed at 872. If 872 holds into the end of the day, then I'm going to look for the bulls to keep complete control, a strong close, weekend buzz and hype, and a potential gap up open on Monday. And so the risk to reward was favorable to make a long entry with 872 as my stop for that possibility. Because, if I'm in at 882 and I stop out at 872, there would be a little bit of slippage. Let's just call it 12-cent risk. But if we close strong and, see an open on Monday, which is off the table at this point, but open at 920, then my reward from 882 is 38 cents and my risk is 12 cents. That is 3 times plus the potential reward for the risk. That's what I do as a trader every day. I'm just analyzing risk and reward and putting myself in favorable positions. In this instance, I stopped out. And as soon as we broke 872, that's the bears saying, wait a minute, we're not letting you keep full control into the close here, bulls. And I could not look at this and say a break of 872 is going to lead to a huge sell-off. But I know that a break of 872 is the first little red flag for bulls. And it led to a bounce attempt, a back test and rejection, previous support, acting as resistance. And then we rolled over with very high bear volume, potentially some being inflows, but certainly not the majority of that volume. So this is a wild beast to be trading. And we'll see about 778 this coming week. First things first, can bears confirm the hourly downtrend? As I mentioned in the live stream last weekend, hour-long live stream, you can measure individual MSOs for relative strength and weakness, dividing it by MSOS. So just as an example, GTBIF divided by MSOS showed me this past week relative weakness. But wait, GTBIF was green on the week. What do you mean relative weakness? I mean that GTBIF struggled 4 days in a row at a resistance zone between 1130 and 1155. 4 tops. Rejection, 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 rejection. There is a clear resistance zone there. All the while, we look at the high of Tuesday, and at the peak of the week, we got 2% over the high, less than 2% over the high of Tuesday. What did MSOS do? Well, the high of Tuesday was 815, and we got 10% plus over that level. So the relative weakness this past week in GTBIF just means MSOS kept going up and GTBIF started to struggle. It didn't go up as much. So we now have a very clear resistance zone. There's a pattern I'm watching on the hourly. It's called a megaphone pattern. I don't want to overly complicate things, but if you are an active trader for many years, you know about the megaphone patterns. They're essentially, I think they are more frequent these days because it is automated algos and AI trading just shaking things up. If everybody's looking at key, clear support and resistances, and more people are using technical analysis, then you're going to start getting, this is a pattern that stops everybody out because you break resistance with no follow through, then you break support with no follow through, then you break resistance with no follow through. So you stop out the bulls, you stop out the bears, and it's just a lot of unclear back and forth action. And so that's what we have now. And I'm not going to make any trades on GTBIF based on this pattern, but I'm just going to recognize, all right, this hourly chart the last 4 days has some clarity for me, and I'm going to keep an eye on it as long as it is in play to see which breaks first, this downtrending support line into significant daily consolidation or the resistance line into bull follow through. TCNNF, there's a different setup here. Look at the pivot. This is a very clear pivot where we can say the most important level here is now 563. Again, imagine the tug of war. That is the point where the bears pushed the price down and could not go any further, and the bulls took back over. And so that is now the most important daily support level for me is 563. If 563 breaks, we're likely shaping up weekly consolidation. And I can't look at the GTBIF chart and have the same confident support level because yes, we bounced off 1014 on Friday morning, but there was no meaningful change in control at that point. It's been the choppy back and forth, whereas TCNNF had the very clear bears taking over for a bit and then bulls taking back over. So there was a very clear pivot point, and that matters. Other names have not started daily consolidation yet. They are still what we call a stair-step pattern, which is a higher low every single day. So CURLF has a higher low every single day for the last 7 days. And as long as that pattern is intact, we're not going to see daily consolidation. The low of the last 2 days is a double bottom at 428. If 428 breaks, daily consolidation is underway. We scout a higher low we measure our retracement size, Alt F on TradingView. If we pull back over 50% plus, big red flag for the bulls. If we hold, bulls keep control. But first things first, higher low everyday pattern. Bulls keep complete control on the daily chart as long as that pattern is intact. CRLBF has the same pattern, stair step, 7 days in a row. We would have to break 229 and 230 for daily consolidation to be underway, and then we measure retracement size to help us determine probabilities from there. VRNOF, daily stair step pattern, longer. We've had this one for 10 days in a row. If on Monday we hold 451, the low of Friday, the daily stair step remains in play, and we don't start daily consolidation until that breaks. Resistance levels for everybody, it's the high of Friday as a key level right now. And honestly, I'm not going to worry about anything aside from the high of Friday because the size of the pullback we saw and the volume behind that pullback on Friday makes that the clear short-term battleground to start this coming week. TSNDF, again, also not very clear. There's a support level at 195 that matters to me in the short term. Bulls broke the double top at 230, but no follow through. Just looking a little bit tired up at these levels. And a big difference is for TSNDF, we have tons of space for the weekly high or low. Many names have a ton of space, but what do we have on TSNDF? A monthly uptrend. I don't think any other names in the cannabis space can say that, where we bounced, we set a monthly lower high at 190, we pulled back for an entire month, set a higher low at 132, and then as soon as we break 190, that's a higher low and a higher high, and you are now in a monthly uptrend. So technically speaking, that is a development. You know, what would it take for MSOS to confirm a monthly uptrend? It's going to take a long time. We need to top out on this move, whenever that's going to be, and then we have to pull back for multiple months. And then we have to confirm a monthly uptrend. It takes a long time to develop. And you better believe that when monthly consolidation next takes place, doom and gloomers are going to be back out. Oh my gosh, told you this move was going nowhere. The bears are back in full control. The shorts are jumping. You know, whenever that monthly consolidation takes place, whether it's in a month or in 4 months, I have no idea. But just know that it's going to significantly impact sentiment. I mean, look at Tesla, completely unrelated, but Tesla was all bears. It bounced 100%. But to set up the monthly uptrend, we had to pull back from the top of that massive bounce. And to set that monthly high or low, it was an entire red month, and that entire red month pulled back 30%. So again, it was, oh, here we go again. Bears are taking back over, but we got to remind ourselves it takes a long time to change the long-term trends. So we'll worry about that bridge when we reach it, but just remember that's going to have to happen at some point if this is going to be a cycle low. The Canadian side of things, honestly, CGC had the best close out of anything. Daily bull flag, we got the clear pivot as well. So now the most important support is 6.6. Strong close. We did not see the end of the day sell-off here. And so now the battle is going to be $1 psychological. So after 9.6, rounding high of Friday, 96 cents, $1 psychological from there. And we got a clear hourly and daily uptrend. So on an hourly, next pullback, anything above 73 cents will be an hourly high or low. Can the bulls make their way up over $1? But a nice strong close. And what I love about the sector is oftentimes you'll see things so correlated that everything's just doing the same thing. But this is a nice opportunity where you have different things going in different directions. And as a full-time trader, I love that where, you know, if you do take a short on the MSOS double top, but you're in a long on CGC, you're making money in both directions. Obviously, it's very difficult to nail it like that. But there are going to be instances where, you know, there's going to be short opportunities and long opportunities presenting themselves at the same time. And that's good for opportunity. It's good for protecting gains through other trades and things like that. But CGC, hourly and daily uptrend, $1 resistance on watch. And TLRY, key support is now 281, but it's struggling significantly comparatively. You know, you show me this chart on its own, I say, all right, no major red flags. You know, we topped out. We're looking for the daily high or low. But you compare it to everything else. Again, that high of Tuesday, MSOS went 10% over that high. And here is TLRY well under that high. And so what a bear wants to see is TLRY fail the top of 340 and then break the low of 281 to reconfirm a daily downtrend. And that would be a significant sign of bulls losing momentum if that were to happen. Of course, if the bulls are able to take back over and head back to 340, then we just keep the daily uptrend and keep bull control. But that's something to keep an eye out for because TLRY currently has the most space for a daily lower high out of any name that we just looked at. So if bears are going to pounce anywhere, the setup is a bit better on TLRY, but we would have to see the bulls continue to struggle comparative to other names. So that's what I'm looking at into this coming week. And again, I'm going to get a lot of information that's going to dictate what I'm going to do on Monday and Tuesday based on what the next bounce looks like on MSOS and the retracement size and whether or not 807 breaks to confirm an hourly downtrend or not. So one day at a time as always. Again, I'm going to constantly be short-term positions in both directions, but longer term looking long. And we'll continue to monitor the headlines knowing that, again, time is on the bears' side. And if it's going to be weeks before we get any kind of safe banking information or progress, or, it could be months for anything from the DEA. If that starts to happen again, it's possible, the more that volume fades after this pump, if we get no new headlines, the more the broader market sentiment is going to have an impact, in my opinion. And the broader market's at a crossroads. I put out daily, check-in videos for the broader market, and we are either going to be a NASDAQ cup and handle to all-time highs to end this year, or a longer-term lower high and tightening range a good part of 2024. I've been talking about that a lot, and I believe that in the absence of headlines, the fork in the road that the NASDAQ and the S&P 500 is about to choose one or the other within the next month, that's going to significantly impact market sentiment. And again, if you don't have headline volume coming in, that sentiment will impact this sector while we wait for headline updates. So we'll stay on top of it. As always, appreciate the support and the likes and the shares and everybody. Again, those analytics are definitely telling us that people want cannabis content. So keep that up and have a great rest of your weekend. Do good things.